We've got, as Chen mentioned, a brand new story, and this is one of the most exciting things about this opportunity is we've got a district here in the, let me just go forward here, the Walker Lane district on the southern end of Nevada. This is an underexplored area. You've got Kinross with a 20 million ounce Round Mountain. As you work your way southeast towards Las Vegas, you've got North Bullfrog, which Anglo Gold acquired us, Corvus Gold, in 2022 for $570 million. They acquired us when we had 4 million ounces. Anglo now has 16 million ounces there, and this is their re-entry back into North America. So I spent 11 years in this district and know it quite well. And 9 months ago, when I was introduced to this opportunity, I about jumped out of my chair with an analogy that the Corvus project is exactly 90 miles to the northwest of Vegas. This is 91 miles to the southeast of Las Vegas, just over the state line into Arizona. And Arizona, as we'll find out, is a much easier place to work than Nevada even, and we've got a very friendly BLM permitting and a lot of patented mining ground. The Gold Chain project in Arizona is our flagship project. The 3 assets, 2 of which are surrounding Round Mountain. That is kind of a side strategy of the company, surround Round Mountain, natural exit strategy. The Jefferson Canyon is a joint venture with Kinross. Our treasury, our focus is Gold Chain, and that is a project that is actually quite exciting. So if you take a look, and you've got just there on the left-hand side of the map, you've got Bullhead City, you've got 43,000 people there. You've got a highway going right past the project, you've got power lines, and it's actually on the water table. And one of the most fantastic things about working in Arizona versus Nevada is if you've got privately owned land, you own the water. In Nevada with Corvus, a lot of people don't realize that we had to buy a farm with a water right, convert it to mining. That was actually one of the reasons Anglo bought us, was they needed water. Arizona, on the other hand, you're on the water table, we have no water problems. In this business, that is phenomenal. Moss Mine is below, right south of us. This is a project that is quite interesting only because it was a low-grade producer. You can get production in the area going. The company that owned it was mining a low-grade on a heap leach, and it was recently taken over by an emerging mid-tier Mako. So we've now got some regional interest going on in what's happening here. So this is one of the great areas that you could want to be in. So if we take a look a little bit closer at Gold Chain, you've got this wonderful structure. It's 3.4 kilometers along. The kind of the upper slant to the northeast there, that's the Tyro vein. That's what we're calling the low-hanging fruit. That was historically mined in 1905 to 1920. It's one of those old-time mining towns. You've got the wild burros still walking around. A lot of historic mining shafts that were mining about 10 grams back in the day, so you know it's oxide, you know it's all amenable to the current modern day heap leaching technology. This structure, Tyro, itself is about 800 meters long. It's 30 to 50 meters wide by about 300 meters in depth. Now the company Gold 79 that had it prior to this reemergence in December, that hole right in the middle there, you can see 85 meters of 6 grams with 9 meters of 51. That was actually a pretty phenomenal hole. Was put out in 2023. There wasn't much of a response in the market. But if we start to look at that second bullet point, you've got an 800 meter by 50 meter by 300 meter block model. The average grade we're looking at is around 1.5 to 2.5 grams. And if you basically extrapolate that into ounces right now, that is about, on the low end, 700,000 ounces. On the upper end, you're pushing 2 million ounces. That is one target. We have known right now 6 targets, 3 of which are multi-million ounce targets. So we've got a lot of ground here, but essentially what we're going to do is we're going to be very targeted because we believe that a maiden resource is possible by the end of this year on that deposit, which would be ostensibly giving us, hopefully in the middle upwards of 900,000, 1 million ounces, 1.5 grams to 2 grams. So that's our focus. About a year ago, some trenching was done, and you can see that the trenching on the bottom bullet point correlates perfectly to the ground and the mineralization underneath. So this is mineralization oxide at surface and going right there from surface. So if we start to take a look at what's going on in the greater Gold Chain district, as mentioned, the Tyro vein is just one target. If we start to look at what was mined historically over 100 years ago, you can see both the Sheep Trail and the Banner structure extensions of it, and you can see we've got quite a bit of opportunity there. And what's really interesting is This has had very little to no work done since more than 100 years. And if you take a look at that final bullet point there, rock samples, and these are just holes or old mining adits and shafts that are sitting there. Sheep trail, you got almost 2 ounces sitting beside an old mining shaft. None of that's been followed up. So if we take a look, in November of this past year, we raised $6 million at 25 cents a share. Stock's trading at 35 right now, incidentally. We drilled 1,284 meters right down the structure. And this essentially is, it's only been RC drilled in the past, it's never been core drilled. So what that allowed us to do is it gave us a much better understanding of what the orientation as the structure of the vein system is. And what we're learning is we might be looking at even a greater width than the 50 meters. So if you're looking on the kind of in the midsection there, the cross section of hole 30, which was released last week, you've got 52 meters of 1.5 grams. That starts at the hanging wall and ends at the footwall, which is on about an 80-degree angle. And it's right below a pit that was mined in the 80s at 2 grams. So we know we've got a structure that goes just basically like a phone book that goes deeper at an 80-degree angle. What we did not do in that first round of assays is that before the hanging wall, we did not assay the 28 meters above that. That has all subsequently to seeing these results, we've actually sent that to the lab, and we're expecting those results out probably. We're going to re-release this hole probably in the next 4 to 6 weeks, but we're actually now thinking we might be looking at an 80-meter plus system here. It may drop some of the grade, but we're certainly happy to drop a bit of the grade to get an 80-meter gold intercept. And as you can see by the surface, that's some pretty robust grade right near surface at 0.6 of almost 7 grams or 6.5 grams there right now. So we've put out 2 holes from that 1,284 meters last week. We're going to put out the next 5 holes, and subsequently the next 3,000 meters is going to start mid-month next month. That is going to be targeted right along that vein system. It's going to be 50-meter centers, and the objective is that's going to give us that maiden resource that we're going to be able to hang our hats on and hopefully drive the valuation around a maiden resource to give us an ability to go out and drill the rest of those targets. The Jefferson Canyon is an interesting asset, purely and simply with a joint venture with Kinross. They're spending their money. They've just finished they're in the process of finishing up their plan of operations. We expect them to get after that the middle of this year. They've agreed to give us data from that work program every month, and said that subject to their approval can put out press releases. They could buy up to 80% of that asset for $10 million. And keep in mind, if you know Round Mountain, it's mining at a 0.1, 0.2, and they need higher grade feed. And this is the epitome of what a satellite mine might be looking like. So if we take a look at the share structure, as mentioned, we just raised $6 million at 25 cents. That's where the structure is now at 65 million shares. We've got 24 million warrants. That would bring in about $10 million in the treasury. The warrant price is around 30 cents to 50 cents on those, and fully diluted 96 million. So our market cap right now is around $20 million. And that is a pretty darn robust baseline for everybody that wants to get in on something that's got a lot of upside potential, given that the stock is trading at 35 cents right now, and we just financed at 25, and the warrants, some of the warrants are 30, but most of them are at 40 cents or above. So with that being said, our focus over the next 6 months is to really try to bring in those warrants and get the treasury going, because we would like to drill, baby, drill. We want to get a drill turning 24/7 on this asset. If we can get the treasury going sufficiently, we're going to put a second drill on there and start to figure out the alternative targets. But right now, getting that maiden resource is job one, and that will give us a credibility to the district. Put this slide in just to give you an idea, a clearer idea of what the warrants look like. Again, the stock trading at 35, you can start to see that the next kind of 15 to 20 cents is where we're going to start to create some trading liquidity. And as mentioned, that brings in $10 million should those be exercised. And for the most part, we don't see any problem with bringing in at least 5 to 6 million of those with the drill program results that are going to start coming out presumably not much later in April, assuming that we can get that underway in the middle of February as planned. Thank you.